What's up, everybody? It's your boy King Smitty, and I'm just here today to share my top three biggest mistakes of 2021 and my trading portfolio. But before I get started, go ahead and like and subscribe to your boy. I'm trying to get up to 100 subscribers in 2022. If I break that, if I pass that, then we'll shoot for 500. But right now, we're on our way to 100 subscribers. So go ahead and like and subscribe. So the first mistake, and really all my mistakes are kind of connected, like a little snowball effect in a sense. But my first mistake is I got emotionally attached to certain stocks. And there's nothing wrong with getting emotionally attached to your stocks if it's the right stocks. Like for me, and just know I'm not a financial advisor. I'm not telling you to buy or hold or sell any of these things, but for me, something I can see myself getting emotionally attached to are my long-term investments. Because I am a long-term investor, and I also like to swing trade. And if you're getting emotionally invested like me into stocks like Tesla, Apple, Nike, Facebook, something that I can see myself holding for the next 5 to 10 years, there's nothing wrong with getting emotionally attached to those in a way. But I was getting emotionally attached to my swing trades, plays I'm only gonna have for like maybe 1 week to maybe 3 months, 4 months, and I was catching myself getting attached to them. Like they had already ran up 30, 40, some 70%, and instead of me taking profit right then and there, I'll hold. Stock might come back down, and then I catch myself averaging my price down. Averaging down for the next run up. Say, oh, it'll come back. It'll come back. So I was emotionally attached to stocks that should have just been a quick in and out, in and out, in and out. Make you a nice little profit and get out. My second one was not placing my stop losses and my trailing stop losses on certain stocks. And that comes with me being emotionally attached to them because I didn't want them to drop down and I sell, then it runs back up. I guess having the fear of missing out while I'm already in it caused me to lose more money in a sense. So I didn't have my trailing stop losses on a lot of my short-term plays, which I am learning now. Like I said, my very first, like I said in my very first video, I did trade before. I crashed and burned. I studied, I learned a lot, and now I am applying all of this real time. Now, I didn't expect to, make an A plus, straight out the gate doing amazing, but there's lessons to be learned as always. You're always learning. So, these lessons that I learned. I gotta be vigilant with that stop loss and the trailing stop loss just to prevent large losses or having to wait for prices to come back to where they are. Because what I could have did is when it ran up, sold it. This is what I should have did. Sold it when I was at the very top. When it drops back down, I can get in at a lower price I was already at with using those same funds plus the profit, which means I has more shares for the next run up, which means even more money. But like I said, some of these things, I was emotionally attached to some of these stocks. So not all of them. I did get me a nice little return. I think my portfolio might be up a little over 100% in the year 2021, but that's with me funding the account and as well as my profits and losses. The third one was not investing in dividends. And like I say, everything's a snowball effect with me. It seems like I got emotionally attached to certain stocks, which is my swing trades, and since I didn't have that stop loss in there, those funds, my profits that I made, what I originally planned to do, take those profits from my swing trades and put those over to my dividend plays. And what I actually ended up doing was, whenever I win on my swing trade, I'll move all that funds to another 2 swing trades. I'll split them up, or I'll average down to one of my plays and put that towards a brand new swing play, in a sense. which means now, and like I said, I got emotionally attached to some of them, so some of them went down. So I didn't really put too much towards my dividend plays because what I really want to get into in the long run is my dividends, especially something like a REIT, a real estate investment trust, because by law they have to pay out like 90% of their profits in the form of a dividend, right? And so I'm looking for good dividends, nothing annually, no annual dividends, no semi-annuals. I'm looking for a quarterly dividend or like a monthly dividend, just so I can have the returns. And I want to have it where I can get it where either every month or every 3 months I have enough money in those dividends where it'll be able to buy its own shares. I'm gonna do the direct reinvestment process or program, the DRIP, where when you get dividends, it automatically invests that right back into that same company to buy more stocks. So if I can get, let's say for instance the stock is $50, and I'm making $50 off of my investments, my dividends, then every 3 months, it's like that stock is buying an extra share of that stock. So like that stock is kind of like taking care of itself at that point. And then I throw in some more money with it, but that's how my passive income. I plan on getting that made. So those are my three biggest mistakes. One, um, emotionally attached to my swing trades, some of my swing trades. Two, no trailing stop losses were placed. And three, I didn't get my dividends plays set up where I would want them to. And I could have got a lot of them at a decent price too in 2021. Maybe not as good as 2020, but 2021 I could have got them at some good prices. But I'm gonna definitely keep looking out and be on the lookout for my next video, where I probably say my recap of 2021. I show you a visual recap of where I'm at percentage wise, and then maybe my top 3 stocks of 2022. But if you're still with me, thanks for rocking out. We're gonna make it a great year. I hope you had a great holiday season. But we're gonna make 2022 even better.